All right, let's go to work. Let's go to work. Let's have some fun today. We are live. This is Travis Witherspoon from Carter Cow Trading. Trade with Travis on YouTube. Obviously, Carter Cow Trading on Instagram. Hope everybody's doing very well on this beautiful Thursday morning. I have 7 on 7. I do apologize for being late. I had to take my dog out so I could be able to use the bathroom and be able to go from there and get everything else done. But let's go ahead and get started and see if there's any trading opportunities. The market kind of moved a little bit quicker earlier this morning, and I did not wake up to take a look and see if there was any type of trading opportunity this morning. But if you look at the tagline, you end up seeing that we end up making $1,200 in 90 minutes. So I want to be able to go through that. Trade with Anna. Hopefully everything's going well with you. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind, and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, not promise that you're going to end up making money today. So if you're new, thank you for being able to hop in. If you're watching on Instagram and you want to see what we're doing from a live charting perspective, you can go to YouTube at Trade with Travis and be able to see what we're doing live and actually be able to see my live charts. But what we do here, if we work for about 30 minutes being able to see any type of trading opportunity, I end up accepting questions or being able to take a look at charts. Typically, I look at the Forex market, mainly U.S. based pairs, but I look at all of them when it comes down to trading opportunity. And also I look at the NASDAQ and Bitcoin and a few other things and kind of put my opinions out on there. And obviously, if there's a trading opportunity and if there's a setup, then I trade it. And if not, then we go from there and be able to make everything else happen. So with that being said, let's go ahead and take a look at the economic calendar. And then after that, we'll see what's going on. And we'll end up going from there. So yesterday, the U.S. market has kind of been in a weird position. It's been bearish when you look at it from a weekly perspective. Then after that, it ended up going bullish. I see earlier this morning, when I started looking at the charts, I see that the market was basically up when it came down to this overall pair with the U.S. dollar breaking the counter trend line. So we literally have missed out on opportunities because of the indecision of the market and sometimes not paying attention to it. And sometimes that happens, but there's always a opportunity in the market. Now we just got to keep our eye out for it. And if it does show up, then we take that overall opportunity to be able to trade it. If we don't, then, if it doesn't happen, then we don't lose any money for not taking a trade. We just don't have any money basically working for us. So just keep that in mind. All right. So this morning, what we're going to end up seeing is continuing jobless claims. We're going to end up seeing initial jobless claims as well. And then after that, President Lagarde is going to end up speaking for the 4th time today. And we'll see what's going to happen with that. We also have a European Council meeting that's going to end up being a little bit later on today. And we'll end up going from there and be able to pay attention to that as well. So going from there, let's take a look at the big three. You take a look at the big three, you can see that the U.S. dollar has broken past that counter trend line. It broke out, it retested, and then after that, popped back to the upside. So we need to get our eyes out on U.S.-based pairs, being able to make that move. This market has moved since the overall open about 30-something points. So that means that all of the other pairs have probably done moved significantly for that overall move. So I don't know if we'll be able to find the opportunity just for saying that we can be able to get in the session, but there will be an opportunity that we may be able to get into. So I want to be able to pay attention to that. Now, what is expected from here? Market end up retracing to the 786. We expect that the market is going to end up closing out right around this overall area at 12,211. We're looking at that overall position. That may end up being the area where most of the pairs will end up finishing up when it comes down to this overall move based off of the daily. If that does happen, then the weekly perspective move is taken out of the way, and we should only be looking at bullish moves from there. Okay. Now, once again, that's kind of It's kind of different from what we ended up saying earlier, but we talked about this bullish morning star. We said that the market was going to retest. We said that it was going to end up being some trading opportunity. If it broke past the trend line, then we will look at that trading opportunity. All right, and that is where we're at. So the U.S. dollar is considered to be bullish. So please keep that in mind. This is where we're at right now. The weekly at this point, even though it's at a point to where it's getting closer to the sell zone, it's not in the sell zone as of yet, so I'm going to consider it to be bullish. We looked at oil. We end up saying if oil is basically in consolidation, we said that on this overall pair, as long as this market end up giving you an opportunity of being able to sell at resistance or buy at support, then you would take the chance. Market ended up going up to $41 on Friday. We missed it. Market ended up popping back up. It got to the 40.80 area. If you took this sale, then that's great. Just make sure that you know that you're going to ride that wave all the way down to $37 a barrel. Me personally, I have a hard line rule on if it doesn't go up to $41 a barrel and touch it again, then I don't take it. So I'm not going to end up trading around this area right here. A lot of stuff can be able to happen towards the downside. So it doesn't make any sense for me to personally trade it right here at this particular point because it's in a consolidation, no trade area. We would have caught it a little bit higher, then yes, we would have took the trade. But right now, there's better opportunities. So this market is still considered to be sideways, but it does have some bearish undertones. So I want everybody to be able to understand that the market is still considered to be sideways, but it does have bearish undertones. All right, now looking at gold, we see that this market made an evening star. We've been looking at this from a bullish move for a while now. And there goes your A, there goes your B, here goes your new C. I think the C ended up getting broken off of this move. Let's go back and let's put in the fib so we can be able to see exactly. This is where we're at on the new fibs. This is based off of the weekly move. The weekly move is expected to be able to finish off at 2172 for that overall move once this market ends up retracing to the upside. Currently, the market has been pushing down. It has already hit the 382 for the overall retracement trade, trading against the overall trend. So right now, at this particular point, unless this market ends up breaking past the trend line, I am out of this market and I'm not looking at being able to trade on gold. We had an opportunity a little bit earlier, but the only trade that I would be looking for is being able to buy instead of being able to sell on this overall pair because it has hit the 382. So currently the R5 position has been taken care of. We are out of that position as well. But this market, we look at it, it's considered to be bearish. And it's considered to be short-term bearish. So if you want to look at the US yen in a position of buying now, maybe. But remember all this week I've been talking about that I want to sell on the US dollar. So that's kind of counterintuitive about what we was talking about a little bit earlier. Let's take a look at the currency strength meter. We should see that the U.S. dollar should be strong on this overall pair, probably be the Japanese yen as well. We see that the U.S. dollar is strong. We see that the Swiss franc is strong. We see that the Japanese yen is strong, and we see that the New Zealand dollar and Australian dollar are weak. So we're going to pay attention to those pairs first and see if there's any type of opportunity for us being able to get in on these pairs, and we'll go from there. And bam, look at that. That's a beautiful counter trend line break. And quite frankly, wish you would have seen that. Obviously, we was looking at it and we were saying that we was hesitant on this overall move, but that is a beautiful counter trend line break. So on the daily, market has broken the inner and broken the outer trend line. It went up to 72, in which we were looking at being able to sell on 72. Market has since dropped down. So we would have got into it 3 days ago based off of that overall movement instead of being hesitant based off of the U.S. dollar bad movement and just looked at the pair for its overall undertone, then we would have been up. Well, you can't cry with spilled milk. We understand that this market has moved down. This market has moved down about 84 pips at this particular point in time. It has broken out of the outer trend line, so that means that this market is truly bearish for its overall move. This market is expected to go down to 67.90, basically 6,800. The point of control is at 68.85, so 6,900. We still have some overall movement that we could be able to look at, but we got to get a little bit of help from people looking to be able to buy this thing back up. Currently, the market is in the buy zone. What I would look for is this. The market is at 70, 78. I will look for on a 2-hour break if we could be able to see, if we could be able to get people to be able to buy this thing up right around to that 71, right around to that 71.51 area, which is about 70-something pips. I don't think that we'll get all of it, but I think we'll get most of it. and have it react off of this trend line towards the top side. If we get that, then that means now we have an opportunity of being able to sell it down to the 6,800 level with other people actually trading and believing in this overall market as well. Okay, so that will be the first thing that I would look for this overall trade. Let's look for a point of control. Let's look for a point of control on this overall trading pair. And this is why I trade at 2 o'clock in the morning compared to actually trading at 7. Because if I would have traded at 2 o'clock in the morning, I would have got into this trade. But it is what it is when it comes down to that. Sometimes you just go to sleep, and sometimes when that happens, you miss out on payers. Typically, remember, 2 o'clock is the most important time or the most volatile time in the market. So you have to be aware that if you don't wake up at 2 o'clock or you don't trade around that 2 o'clock to 3 o'clock time, you will miss out on trading opportunities. All right, so let me show you what I see right now on the dollar. We can see this overall movement right here. Here goes the new ABCD fib right here. I don't want to miss out on this opportunity a second time, because remember the first time we made money off of it, but we didn't get all of it. This market is expected to move down to right around that 6,700 area. We can see that the 144-day moving average is right around the 6780 area, which matches up with the point of control that we were looking at before. Let me do this on a window. I think I already have it done on a window. Okay, there we go. Now, currently, we broke the point of control at 71.72, and the market ended up rejecting. That is a textbook move to the downside. Quite frankly, we would have paid attention to that a little bit more. That would have been the sale to be able to take, and you could have stayed in that a little bit longer. Now, what is expected to happen? Let's go to a full screen so you can be able to see it. We have this whole dip of an area that is happening right here. We're right in the middle of this little bit of point of control. We can see that we're definitely in the middle from there. We're not going to get that many people that are looking to be able to buy in this overall position. I'm just going to be honest with you. We may have missed on this overall position unless you can be able to find a 15-minute time and be able to sell it down with it. The 2 hours definitely in the buy zone. So I would hope to be able to see if people will buy it. If people do buy it, then I will look at being able to trade that opportunity. But with the low trading volume that I'm seeing right here, we probably won't end up getting anything until the market ends up getting towards the 6,900 level, right? So some people may look at this as a bad price and the market may end up bouncing back up. I don't know if that's going to happen. And this is one of those things where you're kind of looking to see if you can get some type of maybe some negative news or maybe something like that will make the market be able to push back up. I'm not chasing this market right now. That's one thing that I will not do. Let's see. We have that first initial break that ended up happening right here, and this is on the 5-minute timer. We can see that the market ended up breaking from the 6170 area. Hit off the 200-day moving average, broke back down, found consolidation, broke the point of control, went right back up to the point of control, and broke the counter trend line break. That is a classic breakout and retest type of move. That was the trade right there that we should have taken. Okay, now this market has fell down a low volume. Right now we're retesting off this overall area again. We have that drop that's happening again. If you want to be able to scalp this market, let's look at what may end up happening. Let's see. Let's add more. Let's add some more to it. Go to the 2 hour. We go to the 2 hour. There's not that much trade volume. And like I said, we could possibly be able to stand and sell for almost 100 pips today, and this market could be able to move down. I'm looking for just a slight up push. If I can get a slight up push, then I go ahead and look to be able to pull the trigger on selling this. If we don't get that up push, then it's going to suck, because quite frankly, you're talking about 100 pips that could basically landslide today. This market has already moved a significant portion today as we speak, but I do think that, quite frankly, there may end up being some opportunity of being able to sell it from there. Okay, so that's what we're looking for. We're looking for a bullish push. We can get a bullish push and a retest, and then after that, we'll look to be able to sell it. If we don't get that retest and the market just keeps on falling, then there's nothing we can be able to do about it. Right now, the market has already moved 103 pips, and that was in the Asian session. So we should see a little bit of a retracement And then after that, we may end up being able to trade it. It may only give us an opportunity tomorrow, so we have to pay attention to that as well. Okay. Here we go. New Zealand dollar, United States dollar. Let's go ahead and go to that. Okay. What happened? What happened? Unemployment change and unemployment rate was bad. And that came based off of the Australian dollar news that happened last night. Okay. Okay. Well, that makes sense. There goes your underlying issue of why that did happen. Okay, so let's take a look at New Zealand dollar. Remember, New Zealand dollar was saying that this market was considered to be weekly. It's getting close to the buy zone for us being able to buy it, and the daily was basically considered to be bullish at this particular point in time, but it was basically in an R6 no trade area. We said that we didn't want to trade this until we end up getting a counter trend line break, because typically we love being able to get a little bit better value when the market goes up. The market was expected to go to 6,700. It did not go to 6,700. It went to 6,680 before the overall move, before breaking on this trend line. So right now, just like with anything, they're going to break out. We're looking for a retest from that retest, and we'll look to be able to sell it. Now, typically, remember, when a market ends up breaking a inner trend line, then it will go to a outer trend line. So we have an inner trend line break. I expect that this market is probably going to end up falling to this outer trend line first before actually giving a move to be able to make this. If we use the Australian dollar as a way of being able to say or sample on what is going to end up happening for this overall move, that would be the kind of move that you would kind of expect. Market breaks down, market retests, and then gives you a chance to be able to break from there. So we still may have some opportunity on this overall pair. So let's take a look at this from a point of control perspective and see if there is a opportunity of being able to trade it. All right. 2 hour, once again, point of control was 66.36. Market ended up breaking from that position and going down. Well, 66.50 basically. All right, so we're in the buy zone. Anything above 66.34, I think would be a great position to be able to get into. We have to understand that we're basically, once again, in an area of low trading volume. So the market could move a little bit more. The market could move down to 65 before anything starts to happen for being able to make a decision. If we go back to the charts and we kind of correlate that with what we're looking at, 65 would end up being 65 will end up being down here. So it would end up breaking a B if that does happen. Okay, so we have to pay attention to that a little bit more. Once again, looking for a high price. If we can be able to get a high price, then we'll end up going from there. If we don't get that high price, then once again, because we was a little bit more conservative on the US dollar based off of the information and stuff that ended up happening, that's what happens. And sometimes it happens like that. Based off of this economic news that ended up happening last night, and sometimes I know with myself personally, when I'm teaching students, I'm not focusing on the actual chart if that's not what we're doing. So that's just like on the NASDAQ 100. Me and a student was doing that big move at the NASDAQ 100, and I'm looking for another entry on that one. But this is what I'm looking for right here. If we can be able to get that, then that'd be great. Anywhere close around this area, then I would like to be able to get in. If that doesn't happen, then it is what it is. All right, so that's where we are on that one. Okay. Let's go and take a look at the NASDAQ 100 since I'm already talking about it and since I've already done looked at this chart a couple times. If we go to the weekly and be able to pay attention to it from a weekly perspective, we can see that this market is considered to be, this market is still considered to be bullish. We are in a retracement zone because the market ended up hitting the extension. Once the market ended up hitting the extension on the weekly, now we end up getting this hammer. Now we end up getting this hammer that's actually ended up being shown. We have a bearish crown that was actually formed a while ago, and now we have a new high. As long as this market does not break the overall A of this move, of this top of this crown, that this market is expected to still fall bearish down to the 382 position. for us being able to go towards that overall area. And then be able to go from there. But we have to look for a counter trend line if we're trading this based off of the weekly. This market still has a lot of room to be able to fall before it gets to point of control. That's at 11,412. Remember, we ended up having this strong push last week and going into Monday based off of this movement. So we have to pay attention to that. On the daily, we can see that this market is about to be able to create a new fib based off of this movement. And what I mean by that is this. We have another bearish day in which that's what we're looking at as that we're probably going to end up seeing. What we can end up doing is now starting to place in a new field towards the upside. And from here, we can be able to say, okay, there goes our new move. There goes our new A. There goes our new B. The market is going to end up pushing down. The market has already went to the 382. It's already went to the 50. So there's no more selling on this overall pair. We're not looking at trading this to the downside anymore when it comes down to this move, unless this bearish crown is going to end up remaining to be the same, and it starts to be the actual move that's going to end up happening. The way that we can figure that out is by looking at a trend change, a counter trend line break, whatever else that you look for is counter trading, and then after that, kind of giving you a better way of being able to get into it. For me personally, right now, I'm gonna end up playing based off of what the chart is gonna tell me. The daily right now is getting close to the sell zone. With being close to the sell zone, we'll see how this market kind of falls to right around this area. I think it could fall down to let's see if we can get some more bars. It could probably fall down back to this 11,500 area before having much of a problem to try to pop to the upside. So from a Forex perspective, I would say we're done with this if we're just going based off of Fibonacci rules and trading it safely. We're looking at this from a pure price action standpoint. The question will end up being, do we have any further movement that could happen if we get a high price to be able to sell? That answer would be yes. Now, would it be the safe trade to take? Not as much. Only because now we truly do have a 382 position that has been hit. And typically, once the market ends up hitting a 382 position, we kind of stay away from that market. So there goes our new fibs. We've already done retrace to the 382. If you're only looking at being able to buy, I'll wait for this market to get into the buy zone before looking at being able to trade from there. All right. I got one more trade that we can be able to take a look at. Let's see. Let's see if there's any other mover that has just been moving to this point.
Wow!
I don't know if y'all can be able to hear my son in the background.
Wow.
Let's see. Well, let's give an update on the Euro United States dollar. And a brief update on the CAD trade that we've been looking at. Remember the game plan on the Euro United States dollar was that we were looking at being able to sell once we end up getting a high price and a counter trend line break. If you would have took that sale right there, quite frankly, at 117.60, currently you would be up about 50 pips off this overall move. Once again, this move actually happened at 2 o'clock this morning. Well, actually, this move actually happened. It actually ended up happening right around 1 o'clock this morning. So if you would have took that trade based off of that movement, then congratulations, you're already in the trade. You should be good to go when it comes down to that overall pair. To the downside, what are we expecting? This market is still expected to be able to go down to the 116 area before actually closing off. We're actually losing a little bit of room because the market is at 55%. So we can't look at it as a swing trade. We can only look at it as a scalping trade if we're trying to do that. Based off of the 2 hour, same deal. If you can get a high price to be able to get in, then you can be able to go from there. You will probably only get one opportunity at this, and this opportunity will probably end up being what happens this morning. I will look for a counter trend line break from this overall movement and see if you can be able to get it. If you are able to get it, then take it. I would go with less risk only because the market has already made its move. If we look at the fib high on this one, it's already completed 1D extension. It's at the in the market, it's at the 127. So I would look for just a slight higher price, and then after that, look at being able to sell it from there. I'll place my stop just above the overall swing high at 117.80, and then after that, look to be able to trade it down from there. You have an opportunity to be able to do so, and I think that will pretty much be it for that overall trade. I will look at placing my stop just above there. Give it a little bit of room to be able to play. It's still considered to be in the A position, but if we look at that from a daily perspective, if we try to trade it from anywhere else, we're not going to get any type of good risk reward that we want to be able to get into. So high price, counter trend line break, if we can be able to get that, look to be able to sell it, and then you should be good to go. Leave that alone, Mason. Let's go to a point of control. Let's see where we're at on this one. Okay, same deal. It's the same type of trade on all of them. Point of control has already been retested. Okay, so we have to understand that. So if the market gives us any type of break, then the market's going to move. Okay, so if you want to be able to get in, you got to hope that people or buyers are going to end up getting in and being able to buy, but it stays below the point of control. If that does happen, then you have an opportunity of being able to sell it. This market has to be able to move up at least about 20 to 30 more pips to the upside before actually being able to consider that is a move to be able to take. And really the point of control was at 1.18 based off of this move. But the middle of this pocket zone area right here, seeing if the market can be able to bounce off this 50-day moving average, excuse me, could be the position to be able to look at. We'll look at this from a daily perspective. From a daily perspective, we're definitely in a low trading volume area, or we're at the last portion of a low trading volume area. If this market does break 1.17, it's going to fall. It's going to fall hard to 1.13. So keep that in mind. If this market does break 1.17, then it's going to continue to fall, and then we'll have an opportunity to be able to trade it, to the downside. But you have to be able to get in and understand that the position that you're trying to go to. Give me that. Give me that. Give me that. All right. Last one, US CAD. US CAD, we end up having the market break the inner trend line, have a slight retest, and right now is going toward the outer trend line. This market is considered to be bullish, but when it broke the 2-hour fib, we end up taking our eyes out off of it because we wanted to be able to get a new field to be able to show up. Currently, the new field is probably already done completed the extension and started to push up like it has. What we're looking for is what is the reaction going to end up being? What is the reaction going to end up being in this area? If this market does break out, and then we'll see basically this type of move. We'll see a breakout. We'll see a retest and then a continued move to the upside. And we see this market reject. And what you end up seeing is that this market will end up we'll see that this market will end up pushing up towards this area and then continue to reject down. Okay, so we have two options. That means that we should not be doing anything until that actually happens, plus the market is in the sell zone. All right, now, with that being said, that's pretty much it for today. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page on Facebook. Please make sure that you end up subscribing to Carter Cow Trading on Instagram and Trade with Travis on YouTube. I do appreciate the people that end up watching this with me while we're actually doing this. Currently right now up $1,200 already, and we'll see how this market kind of moves from there. Starting off very well off the month. For the month, we're up right around $2,000. So we'll see how this kind of plays out and kind of goes from there. Very interested in being able to find more trading opportunities, and hopefully we can be able to make money together. Like always, plan your trade your plan. Please make sure that you end up keeping your eyes out for our boot camp that's going to start October 26th to the 30th. I'm going to send out more information a little bit later on, and then after that, you can be able to go from there. Take it easy.